Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, July 14th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here the ES holding near the highs of the 3-day range here. A nice bounce back after rejecting the previous session's lows in pre-market trading. A nice rounded bottom there in intraday charts, which has led to a nice push through the 4370 level, which is the previous session's midpoint. The prior session price did close below its previous day's midpoint, which was indicative of further strength, at least early today. But again, a rejection of the prior low has led to a return back up. We do have Fed Chair Powell testifying here the next 2 days, today at 11 a.m. Central and tomorrow 8:30 a.m. Central Time. So that's going to give the market something to think about and move from. So continue to await news and headlines from there. So there could be headline risk on that. Beige book later on this afternoon. Crude oil inventories as well. Any failure to hold the 4350 zone here could indicate a bit more of a pullback. But as you know, any of these pullbacks have been an easy opportunity to buy it right back for a swift reversal back up. So if we do see a 1-day, 2-day, or 5-day pullback, it could be enough to jump back in, defend, and rotate this thing to new highs. Let's take a look now at the NQ. The NQ right now continues to be in a very, very intense uptrend. This trend, again, as I mentioned before, continues to hold above the 8-period pivot-based EMA. Any push below that offers an opportunity to trap and return to new highs. Very, very bullish ever since it broke out of this compression here. We talked about that back in May. This nice extension also has put us right in play at that 15K level, getting very, very close yesterday, reaching 14994.75. So about 5 points away from hitting that 15K level. Perhaps today it does reach that level. The 15073 is the 100% key range target that we have from back here in February. So when we had that impulse move in February, we got ourselves that key range, and we talked about 15073 being the upside target. This recent 13,000 test has led us right to it yet again. Again, that target could be in play here pretty soon. Any failure to hold 14750 rather could open up a little bit more of a pullback, but again, this market's been in a higher value relationship. Any pullback could offer an opportunity to continue this thing higher. July tends to be a very bullish month overall. The 4th of July weekend and into that week and after it tends to be bullish, and we've seen that come to fruition. Looking for further overall strength here unless we see some sort of failure through the previous session's low, in which case we could pull back a bit deeper before we bounce yet again. Taking a look now at crude oil. Alright, so here's crude oil. You'll notice crude oil remains very bullish as well. This one has given us a very nice key range right here. It's a 6-handle key range, which means 83s or thereabouts is the ultimate upside target. On the downside, 65 or 6450 really would be the downside target if it were to break to the downside. We're bumping up against major long-term market structure here. The 76-75 zone, very, very important level going back 5+ years. If price can push through that zone, it opens up 80 to 84 and even market structure as high as 90 on a longer-term basis. So there's plenty of clear air up above. If there is a failure, though, to get going up above here, again, this key range forecasts a target back towards 6450, which would be right inside that market structure that we would continue to trade within. So again, very bullish overall. Right now, narrow 4-day range with an upward bias. At some point here, we got to see if prices can find a way to get above 76s and stay. The 2 times it's hit above 76, hard rejections back down. So again, watching to see which way we go from this key range, as very reliable targets will be seen above or below that range. Alright, let's take a look lastly here at gold futures. Gold right now, very strong day here today, up 1%, stop run day up breaking through the narrow range here. We talked about yesterday that this thing has been forming ranges at a higher clip here. That's a clean market structure up, and continues to hold as well the 1800 level, which is at LVN. Now the fact that we've broken through the top of this 5-day narrow range here, 6-day narrow range, opens up the potential to continue not only back to 1863s, but perhaps even a bit higher into the breakdown point from this range here, which is back toward 1900. So again, 1863.80 is the FOMC key level from June. That's the first high probability target that we're likely go to. We talked about before that if this was going to be a lower low failure, we could ultimately get ourselves all the way back over here if the right things play out, and so far they've played out perfectly. As a matter of fact, this is a miniature version here of what we saw back here, trending down here. Instead of a lower low failure was a higher low, and then the right things played out for this thing to push higher. We're seeing a very similar type of structure here. So as long as price can continue to hold above 1820 here, we have a shot to continue toward 1863 and likely into that 1874.30 up above. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.